Hi fellow traders, I'm making this video today to share my USD JPY analysis with you. So like you can see on the chart that I have already drawn a butterfly which has been completed at the 127.2% extension of XA. So this is X, A, B, C, D. Excuse me. So we all know that this is a harmonic pattern and this is a reversal pattern, which is why we may anticipate upward reversal. And if it cannot cause the full-blown reversal to the upside, it can at least cause some upward retracement, and the minimum retracement that we can expect according to the classical approach is 30% of whole butterfly, which I have already drawn on the chart. You can see this is the 30% of the butterfly, which is approximately 300 pips from the bottom. 297.3, approximately 300 pips. So this is the one thing for setting up the target in your buy position. I will later discuss how we will determine the opportunity to enter the buy position, but let me show you one more thing which may support bullish scenario. So this is almost oversold, and if we look at the price action to the downside in recent 3 months, July, August and September, you can see earlier it was very fast to the downside because it was not just falling because of the negative data from the US, but also because of some sort of intervention, unspoken intervention of Bank of Japan. But later their officials had told that their intervention worked, so they indirectly admitted about the intervention. So initially it was very fast, which is why you can see that the RSI had penetrated below the 30 level and had stayed below 30 level. However, this is not the general case when price is not too much influenced by economic data and economic intervention. So you'll find that this generally stays between 30 and 70. For example, I have zoomed out a little bit and you can see what happened between June 2022 and today. It always stayed in most cases between these two levels. So these two things are giving us a possibility to start looking for the buy opportunity. I'm not saying yet to buy immediately. I'm saying that let's look for the opportunity. And how we're going to do this: today there is no economic data. Tomorrow retail sales is going to be released. Having seen the negative revision in PPI, no big changes in the CPI, it's really a big conundrum to understand what's going to happen in retail sales. So we'll have to be very careful if we are going to enter any position to either side. So let's go to 1 hour time frame and 4 hour time frame to understand what we can do to enter the buy position and how we can determine this opportunity. So let's look at all the attempt to the upside. So you can see whenever it started moving to the upside, it made a movement of approximately 190, 195 pips and then fell down. These two were pretty harmonic, similar kind of swing. This is 226 pips, just a difference of 26 pips. So it's starting to go upside by 200 or 220 pips, and then it goes down. And you can see that the price further extended to the downside, making a newer low in the oscillator, which cancelled the previous bullish divergence. If somebody's looked at this chart till here, then it could have been a case of a bullish divergence. For example, we could say that price made a lower low, but the oscillator made a higher low. But price didn't reverse from here, and then oscillator also made a newer low, lower than the previous one. So bullish divergence has been cancelled, and we have to rely on other factors to determine the buying opportunity. All right, so we want a bigger magnitude to the upside to figure out if this is really going to reverse from here, or it is really going to touch at least this area, which is coming around 142.50. So there are two ways of understanding the magnitude. Number one is to simply look at the magnitude of pips. For example, here it was 200, then 220. So then it should be at least 200 to justify the beginning of the reversal caused by the butterfly. But it will already be too late to enter the position. For example, if you enter the position after 200 pips move to the upside, your risk will be 200 pips to the downside, and remaining 100 pips will be your reward, because this total distance from the bottom to this minimum retracement classical, according to classical approach, is kind of 300 pips only. So we have to go down to 1 hour time frame to understand, is there any other way where we can get bigger reward and we can risk a little less. So let's go to 1 hour time frame to see what we can do there. We will look at the very recent swing, and we will try to see what kind of movement USD JPY made to the upside. So this was the movement, then you can see similar movement, almost similar movement, and then almost similar movement. So these kind of movements did not create enough bullish force for any further upward continuation. So we need a bullish force bigger than this. This is very logical thing to consider. And the second is the RSI. So we can draw a line on the last stop of the RSI. Why is oscillator important sometimes? Oscillators are important sometimes because price action may not be similar on all the time. Maybe price will be moving price will start moving slowly. So even if the uptrend will start, it will be very gradual compared to the previous movements, and it can still be steady. So you can figure out the steadiness by looking at the RSI. For example, if price starts moving to the upside, but let's say it is very gradual, and then it moves to the upside very slowly like this. You can look at the slopes. This was the slope of recent upward movement, and and we have the similar slope of the recent upward movement today. But what happens if price starts moving very slow? So it can cross this area, but it can be very slow. In that case, what you will say that the RSI will not cross the recent high. For example, it was 42.74. It means that it will clearly tell you that the magnitude of the bulls or the power of the bulls are not enough to enter any buy position. So what I want to see in the market is, I want to see it to cross above the 42. In general cases, I suggest it to cross above 50, but we do not want to lose so many pips waiting for the RSI to cross 50, because we have total 300 pips room from the bottom to this level, and out of 300 we cannot risk more than 150 pips to keep our risk and reward equal, or else we will simply skip this opportunity. We will not trade at all. So 2-3 things to consider. Number one is the speed of the price. Number two is to look at the RSI to clearly understand whether this is enough bullish force or not. And number three is to be careful of the retail sales. If this whole thing is going to happen before retail sales, and we are going to enter the position before retail sales, we have to be very careful about the retail sales, and we need to close the position. Because if retail sales come negative, I'll not be surprised to see further fall in USD JPY. And butterfly has another extension. Remember that 127.2% is not the final completion point. This can go to even 168.8% extension, and then it can reverse, and it will still be a valid butterfly, and it will still say the same thing, that okay, now butterfly has been completed, and let's see if there is any chance of reversal to the upside. So just because we have the butterfly, just because we have seen almost oversold condition on daily time frame, we cannot certainly expect upward move. That's why we have to come down to 1 hour time frame to look finely and meticulously to understand whether we really have a buying opportunity or not. So that's all in this USD JPY analysis video, and thanks for watching. But before I finish this video, let me tell you one thing. If we do not get any bullish opportunity, we can take the sell position after the retracement in case we get negative retail sales. So this is an idea of how to trade the retail sales tomorrow. and if I'll see any setup, I may make another video about trading retail sales on USD JPY. That's all. Thanks.